All right, everyone, buckle up, because the crypto world is absolutely electric right now. We've got shifts, we've got whispers, and we've got data that's making waves. It's a fast-paced game, and if you're not plugged in, you're missing out on the action. Get ready for the updates you need to hear to navigate this wild market. Let's dive straight into what's shaking things up today. First up, the big kahuna, Bitcoin, is showing some serious moves. We're seeing volatility levels surge, breaking past recent lows and hinting that the turbulence we expected might just be kicking into high gear. Is this a sign of things to come for the wider market? We've got the inside scoop on what this means for your portfolio. Then, we're tracking the big players, the Bitcoin whales. They're making waves again, and some are pointing fingers, suggesting familiar playbook moves are at play, pushing prices around. What does this mean for the average trader when these giants start moving? We break down the suspected whale activity and its impact. We're also looking at the underlying strength, or perhaps the lack thereof, as Bitcoin tests critical cost bases. What are these key levels, and what happens if they don't hold? We're diving deep into the investor sentiment and the on-chain data that tells the story of where things might be heading. And in our final segment, we're connecting the dots between major exchanges and market makers, with on-chain data suggesting some serious shadow play. Are these moves designed to manipulate the market, and what does it mean for decentralization? We've got the details that could change how you view the entire ecosystem. Stay tuned, you won't want to miss any of this. Make sure you hit that subscribe button and ring the notification bell so you never miss an update. The volatility surge, Bitcoin's pre-PCE dance. Get ready, because the market's pulse is quickening. Bitcoin has recently seen a notable shift, dropping nearly 3% to trade around the $109,800 mark. While this might seem like just another day in the volatile crypto landscape, the real story is unfolding beneath the surface. For the first time since mid-June, key indicators of Bitcoin's 30-day implied volatility, tracked by indices like Volmex's BVIV and Deribit's DVOL, have surged, climbing above the 100-day simple moving average. This isn't just a blip. It's a significant uptick, suggesting that the price turbulence that traders anticipated for August might actually be materializing in September. This increased volatility could serve as an early warning signal for traditional markets as well. Analysts are drawing parallels to Wall Street's VIX index, which, when inversely correlated with stocks, can indicate a potentially rough day ahead on the stock market. The sentiment is echoed by market watchers who point to mounting liquidity pressures, driven by declining reserve balances and impending large treasury settlements, potentially leaving equities vulnerable despite recent low volatility. All eyes are now on the upcoming U.S. core PCE release, the Federal Reserve's preferred inflation gauge. Analysts suggest this data will be crucial in shaping the Fed's future easing path, perhaps more so than the immediate September decision. If the PCE data comes in at or below expectations, it could support a positive risk sentiment. However, a significantly hotter reading might push the Fed towards a more cautious, one-and-wait approach. Investors are advised to closely monitor core services, wage trends, U.S. Treasury yields, and the DXY index as key determinants of risk appetite. Interestingly, in the current environment, Ether/ETH might be poised for outperformance, especially if the PCE data signals a softer inflation outlook. This potential shift is partly fueled by increasing investor focus on ETH, as evidenced by recent ETF flows. This week alone, U.S.-listed ETH ETFs have seen net inflows exceeding $1 billion, nearly doubling the inflows into Bitcoin ETFs. Meanwhile, in traditional finance, the spread between U.S. 10-year and 2-year Treasury yields has widened to its highest point since September 2022, a curve steepening that historically supports bullish sentiment for both gold and Bitcoin. Audience impact. This surge in Bitcoin's implied volatility and the anticipation surrounding the PCE data has certainly captured the attention of traders and analysts, with discussions intensifying about potential market shifts and the Fed's next move. But what happens when the big players start making their moves? Stick around as we dive into the suspected whale activity that's got the market talking. And then, we'll analyze Bitcoin's crucial cost bases and what they mean for the average investor. Whale playbook: Bitcoin dips as market wobbles into PCE data. Prepare for a replay of August's drama, as Bitcoin whales appear to be back at their old tricks, sending BTC prices tumbling below the $109,500 mark. Data from Cointelegraph Markets Pro and Bitcoin Bulletin reveals that BTC experienced a significant drop of around $3,000 in a matter of hours, hitting local lows of $109,436 on Bitstamp. This sharp decline occurred amidst a wave of liquidations, with crypto long positions suffering approximately $350 million in losses over a 24-hour period, leading traders to point fingers squarely at the larger players in the market. Veteran trader Merlion highlighted this pattern in an X post, referring to it as the whale playbook, suggesting a predictable sequence of consolidation, capitulation, breakouts, and rallies that has been repeating. Merlion specifically noted large inflows of Bitcoin and Ether into market maker Wintermute, a move that has been scrutinized as potentially manipulative. This alleged whale selling pressure has been a recurring theme throughout August, contributing to previous price dips below $109,000. Keith Allen, co-founder of the trading resource Material Indicators, echoed these sentiments, identifying the actions of these liquidity owners as potentially deliberate attempts to influence price action and trap unsuspecting traders. He referred to this entity as Spoofy the Whale, a moniker given to the suspected manipulation of liquidity to create predictable short-term price movements. This kind of activity raises serious questions about market integrity and the influence of large holders. Adding to the market's uncertainty is the looming release of the U.S. Personal Consumption Expenditures (PCE) index, often referred to as the Federal Reserve's preferred inflation gauge. Scheduled for release at 8:30 am Eastern Time, this data is critical for crypto and other risk assets, especially in anticipation of the Fed's potential interest rate cuts later in the year. Crypto analyst Kyle Dupes commented on the situation, suggesting that the PCE data could either trigger a further sell-off or ignite a much-needed relief rally, describing Bitcoin as wobbling ahead of the announcement. Audience impact: the suspected spoofy activity and the market's sensitivity to the upcoming PCE data have fueled widespread discussion and concern among traders, who are closely watching for any signs of manipulation or significant economic shifts. As the market braces for this key inflation data, let's shift our focus to the underlying financial health of Bitcoin itself. What do the cost bases tell us about investor sentiment? And then we'll uncover the institutional whispers that might be influencing the market's descent. Bitcoin's costly correction, testing key support levels. Bitcoin finds itself in a challenging correction phase, currently hovering near the $110,000 mark after its recent all-time high, exceeding $124,500. The pressure is mounting, particularly on recent buyers, as crucial cost bases come under strain. Glassnode's latest weekly newsletter highlights this growing stress, noting that any immediate rebound is likely to face significant resistance from short-term holders eager to exit at breakeven. The asset has dipped below its 1-month and 3-month realized prices, which stood at approximately $115,300 and $113,700, respectively. The realized price metric, which represents the average purchase price of coins within a specific timeframe, offers critical insights into investor positioning and sentiment. Currently, the 6-month realized price, sitting at around $107,440, is acting as a vital support level. A breach of this level could signal further downside. Adding to the analysis, Bitcoin Bulletin research points out that the short-term holder realized price is above $108,500, a level from which Bitcoin managed to rebound recently. However, the realized price for all buyers who entered in 2025 has seen a decline, now hovering just over $100,000. This creates another important psychological threshold that the market must contend with should prices continue to fall. The current correction underscores the growing pressure on investors who entered the market more recently. The reliance on these realized price levels is becoming increasingly important for gauging market psychology and potential turning points. The broader crypto market is also reflecting this cautious sentiment, with the Bitcoin Bulletin 20 index down 3.6% in 24 hours, indicating a general risk aversion ahead of the U.S. core PCE inflation data release. This key inflation report is closely watched by the Federal Reserve and could significantly influence their decisions regarding interest rate cuts in the coming months. Analysts at crypto exchange Binance have suggested that a hotter-than-expected PCE figure might lead the Fed to adopt a one-and-done approach to rate cuts, a scenario that could dampen market enthusiasm. Audience impact. These insights into Bitcoin's realized price levels and the broader market's reaction to inflation data are generating significant discussion about the immediate future trajectory of the cryptocurrency. As we assess Bitcoin's internal pressures, let's turn our attention to external forces. What on-chain data is revealing about potential manipulation from major players? And what does this mean for the broader crypto market's fragile state? Institutional whispers, Binance's shadow over crypto's fragile descent. On-chain data has surfaced, directly linking the major exchange Binance to Wintermute, a prominent crypto market maker, through substantial transfers of Solana Sol, Bitcoin BTC, and Ethereum, ETH, across platforms like Kraken, Gate.io, and KuCoin. Crypto analyst Marty Party has highlighted these movements, suggesting a potential collusion between Binance and Wintermute that could be influencing market dynamics. The analyst further indicated that this suspected manipulation extends to other tokens, including HYPE and XRP, raising significant concerns about the integrity of operations on Binance, which still holds a staggering $185.8 billion in assets. These extensive on-chain activities preceded a sharp 4% decline in the total cryptocurrency market capitalization, which fell to $3.86 trillion within a 24-hour span. This downturn triggered a massive deleveraging event, resulting in approximately $924 million in liquidations, according to CoinGlass data. A substantial portion of these liquidations, over $750 million, affected long positions, indicating that many traders were caught off guard by the sudden and severe sell-off, potentially exacerbating a cascading long squeeze. Further analysis of Bitcoin's on-chain data reveals a significant trend among large investors. Over the past 2 weeks, Bitcoin whales have offloaded a considerable 50,000 BTC. Concurrently, short-term holders have deposited around 21,200 BTC onto exchanges in the last 24 hours alone. These figures collectively point to increased selling pressure from both institutional and retail participants. A QCP report attributes the market's current fragility to a softer institutional demand, making it particularly susceptible to such sharp downturns. In response to fears of market manipulation and forced liquidations on centralized exchanges, CEXs, traders are increasingly migrating towards decentralized exchanges, DEXs. Prominent trader, the White Whale, has noted this shift, with platforms like Hyperliquid experiencing explosive growth, recording $2.4 billion in traded volume over the last 14 days. DeFi Llama data further indicates that Hyperliquid's total value locked, TVL, has reached $685 million, showcasing a growing preference for more transparent trading environments. Looking ahead, Bitcoin is currently testing a critical support level around $109,000, a price point that previously acted as resistance. The ability of Bitcoin to hold this level could signal a potential bullish reversal. Meanwhile, market participants are keenly awaiting broader catalysts, including signals from the Federal Reserve regarding potential interest rate cuts in September. The recent decision by former President Donald Trump to remove Fed Governor Lisa Cook has added another layer of uncertainty to the monetary policy outlook. Audience impact. The revelations linking Binance to market maker activities and the subsequent migration of traders to DEXs are sparking intense debate about market fairness and the future of centralized versus decentralized trading platforms. We've covered a lot of ground today, from volatility surges to whale movements and potential manipulation. But what's the ultimate takeaway? Let's recap the key stories and get ready for the next big move. And that's a wrap on today's essential market updates. We saw Bitcoin's volatility spike ahead of key inflation data, suspected whale activity influencing price action, critical cost bases being tested, and intriguing on-chain links between major platforms and market makers. Don't miss out on any future developments. Make sure you're subscribed, hit that notification bell, smash that like button, and drop a comment below with your thoughts. Follow us on all social media platforms to stay connected. We'll be back with more crucial insights soon.